down in Invercargill a few weeks ago and was asked by a deer farmer there why, excuse me, are we being paid $11 a kilo and isn't going to last? So this is a little bit a reflection on that and what my answer was. So in 5 minutes or less, why? Firstly, we've had about 30 years, there we go, of long-term investment in New Zealand venison. So these things don't happen overnight. You've had a pretty much a constant evolution of product, quality, customers, markets and marketing over that period of time, as well as brands. Investment in the USA and the Savannah program. So again, it's kicked off about 25 years ago. It's been a slow burn, but what we're seeing today is a real reward for that long-term investment to the state that USA is now New Zealand's largest venison market. Coinciding with the fact that the USA is a particularly strong economy, and the consumers there have a real desire, and it's particularly in the last 5 years, a really strong movement towards natural grass-fed proteins and specialty meats. And we also have the benefit that we don't have domestic competition. While there's an awful lot of deer hunted, there's more deer hunted in some states than we produce in all of New Zealand. Those animals and that venison can't be sold in the domestic market. So when chefs are looking for provenance, New Zealand really offers that to them. They don't have a domestic option. We also have an economy there where their food service and restaurant spending exceeds their retail spending. So they love to go out to the restaurants, and New Zealand venison is perfectly placed. And we're really focused on the food service and restaurant side of the business. And you know, there's a very good saying from people involved in the industry over there that restaurants are interested in product, retailers are interested in price, and I think that really holds true. We do have 30% less production. No doubt that's had an influence, and Lane mentioned that in his talk before. So, you know, we have less production available, so that's allowed us to be a bit more selective, and we've been able to cull out some of the customers who perhaps didn't have the same investment in the value chain, and we've been able to pick the really best customers and who deliver the best value back to us here in New Zealand. This has also coincided with the major increase in the value of pet foods. So venison has become a very strong brand into pet foods, particularly in the US market. So those pet food companies, large international organisations, if they have about a 6% venison content in the product, they can label it as venison. So they've been willing to pay much more in order to source that product because, again, it's become strong demand. People are looking at what they're feeding their animals and they're willing to pay more for it. So they're more interested in what they pay for than 94% of what goes in the mix, and they've been willing to pay significantly more to get that 6% venison content. Also, we've got firm demand from Asia for the other co-products, the tails, the pizzles, etc., sinews, and so again, we've got a firm pricing and firm demand there. A couple of little issues at the moment with some changes at border controls in China. So market prices, are they sustainable? They're certainly fully priced. We've pushed things really, I think, to about where we would safely want to go at the moment, both in the US and European markets. There's some risk around leg pricing into Europe. We've seen some retailers back off and not being willing to stock the product, stock the venison steaks that are produced over there. But that's been offset by the investment in the Savannah program. So the growth in the venison sales into the summer will hopefully help to compensate that. The diversification away from Europe has continued, and that's continued to deliver benefits to us. The USA is a 12-month market. Europe is really only a 3-month market. So the fact that the USA is consuming all year round, our customers there are buying for current demand, not for what they hope to sell towards the end of the year. We are seeing increased growth in other markets, Australia, Asia, plus the New Zealand market. So smaller markets, but the diversification there is really important. We don't see these lower supply volumes changing quickly. All the modelling that DINs have done, everything we're seeing, the discussions we're having with you farmers, is that while there's opportunities for you to grow, we don't see massive growth, and it's not going to occur. It's also been really well supported by strong velvet pricing, and with this great situation that even though the volumes are going up, people aren't sort of going, shh, don't talk about the volume anymore. The volume's going up and the price is going up. So we seem to have a very stable, strong situation, driven by the maturity of the Korean market and the growth in the China market. So it's 8 or 9 factors. It's not one factor. And that's why when we look at this, we analyse it, we think that venison should continue to outperform all other classes of dry livestock farming. Because, yes, we might have a risk, we might have a shock that could affect 1, possibly 2 of those things, but not enough to make a dramatic change to the situation we have today. And if we look at it, it's not $2, it's $4 a kilo more than lamb returns, even though they're at a high level at the moment. And we believe that is a sustainable situation based on Lane's speech and recommendation. It sounds like we might be taking $2 off you all and invest it in marketing for the future. So that'll be a good, healthy discussion for later on. Thank you very much.